Hello everyone, in this video I'm gonna talk about Apple stock, and I'm gonna show you my thoughts on the price and the point that I will be getting into the stock. I think the stock at this point right now, as you can see, is way overpriced. I mean, might not be overpriced maybe, but the price is up too high, too far away from the averages, the moving averages, which is this one. For example, this is the 20-day moving average. We got the 50-day moving average right here, and the 200 right here is this green line. It's hard to see, but it's there. Let me show you. This is the 200 moving average, and what you're looking at right here is the monthly chart from pretty much 2017. Let's look a little bit more into the past. You can see from 2004 it's been going up pretty normal, I guess, right? But then at this point right here, it just went up way too high. It shot up too high on the news of the split, and the split really means doesn't mean much or anything. It's just that the price was lower for new investors to afford the stock, right? So as you can see here, we got a big red candle there, and it went all the way up to around 138, and the split was 4 for 1. So for every one share you had, they gave you 4, right? So right now it's sitting at 120. I think the stock can decline at least another 20%, and that will be about $25. So a reasonable target, in my opinion, is about $95, right, for Apple. But I'm also thinking that actually it might get lower than that. It might go as low maybe as 80. And why? Well, a few reasons. Is it's election year, right? The elections, politically there is a lot of uncertainty sometimes, and stock prices just sink, right? They go down. Okay, so it might hit 80, maybe even 71. I don't know, we'll see. So 95 to 80, or I would say maybe 100 to 80. I will start buying probably by dollar cost averaging, right? Let's say I'm gonna start buying when it hits 100. I might buy a few, right? If it gets lower than that, you get more. If it gets lower, then you get more, or I get more. And by the way, this video is not financial advice. This is just my opinion that I'm sharing, and I hope you find it useful. And well, what I was saying here, this is a monthly chart. Let me show you the weekly chart. This is a weekly chart. It's still too far away from the moving averages. You see right here, it went as low as 111. I think that was yesterday. Well, last Friday. And by the way, today is 9/6/2020, and as you can see, it still has plenty of room to go down. So what I was saying is that a few reasons, right? The election year, also the fact that the stock is overpriced. I mean, it's way too far away from the moving averages, and it's way too high, and it went up too fast. So when that happens, you know, and you can see right here, it's pretty parabolic, very parabolic. So when you stack things up like that, they just tend to fall down, right? So people are gonna take profits, it's gonna fall down, and I think this is a good area to get back into the stock. And so election year, the price being too high is another one, right? And on top of that, we have the health situation. So that's another thing, a little bit of uncertainty there. So if things go really bad, I think it could go as low as maybe $62. Because when you think about it, let's say it hits 80 and 95, right there in $95, it will be a 20% downturn from the current price of 120. So 95 is not too bad. 20% I think is fair, but still up here a little too high. But because Apple is so popular and they've been making a lot of money, you know, this might be a good support area, maybe around 100, maybe if things go fine, okay, you know. But my target is still around $95. Might be a little lower or a little higher, but just around that area. So tell me what you think. Share your thoughts with me in the comments section below. And if you are buying Apple, if you own it, if you are planning on getting more, or if you are selling at this point, I just want to know your thoughts and your opinions. And just to talk a little bit more here, if you want to stick around, this is the company, right? And as you can see, according to Yahoo Finance, is in the overvalued side. It's leaning more, and this is not very precise, but it's leaning a little more towards the overvalued, which I think, in my opinion, it is. The PE ratio is 36. I think if it goes, you know, around to like 28, would be a much better price. And earnings per share is still pretty good. The dividend is pretty good, right? 0.82 cents, 0.68%. It's not bad, actually. Still doing good. And as you can see, Apple here, it had a revenue of $260 billion and a profit, well, earnings of 55 billion. So that's a good company. It's making about 30% of its revenue, right? So like I was saying, it's still a little too high. I mean, when you reverse the split at this price of 95, for example, when you multiply 95 times 4, that will give you the price that it was pretty much around. It's still a little expensive, I would say, right? I mean, as you can see, let's see, it will be at a price of before the split of $380, which will be kind of high, right? Still, I think a little high given the situation, but I think it's a fair price. I mean, the way things are going with inflation probably coming up in the future, this will be a nice support area. Now if it goes lower, like I said, you know, probably maybe then pick up a little more. So that's all for this video, and be careful out there. And like I said, this is not financial advice. It's just for entertainment purposes, and see you in the next video. Thank you for watching. Bye.